Welcome to today's edition of The Rundown. In previous rundowns, we've talked about risk tolerance, and building portfolios to adjust to your individual risk. Today we want to talk about why. Why do we need to stick to that strategy? Why do we need to stick to that discipline? Well, in the last 12 years, we've had two financial crises. We had the financial meltdown in 2008, and we've had the coronavirus this year in 2020. So we've done a fair amount of research, and we've looked into why you need to stick to a strategy and stick to that portfolio that we've built for you. So as you can see from this presentation, this graph that Putnam Investments puts together every year, it's a rolling 15 years using the S&P 500. Now, based upon your risk tolerance, it's unlikely that you would be 100% in the markets. But if you were, that green line, as you can see, you would have annualized or averaged 9% per year for that 15 years. That's staying in, never disengaging, just rolling through those 15 years. The amazing thing is that you missed the 10 best trading days during that 15-year period. You would have averaged 4% or half of what you would have done by staying in there. And then to make it even worse, if you'd missed the 20 best days, your returns were basically 1% or more. So what this illustrates is the importance of staying in the market. Timing the market is virtually impossible. We never know when those 10 best days, when those 20 best days are going to be. So a financial crisis can redefine your risk. If you feel the urge to move money to the sidelines for protection, we're totally comfortable with that. What we don't want to do is move such large sums of money to the sidelines that we're going to impact your returns. As you remember, looking at the chart from before, if you miss the best 10 days out of the last 15 years, your returns are going to be cut in half. So we don't want to time the market, is what we're getting at here. So if you're still uncomfortable after having moved a lot of money to the sidelines, we may need to reassess your risk. So we may need to have another conversation about your portfolio, your risks, and also we have to make sure that that portfolio will still achieve your goals. So the idea is to stay the course to achieve your goals with the most comfortable portfolio that we can put together for you. Thanks for tuning in to The Rundown, and we'll see you next time.